I mean, I typed it, August 3rd. It's just absolutely just boggles my mind that we're in August already. I feel like we were just approaching the summer and was talking about the kids getting out of school and what was going to happen over the summer. And now it's like, yep, school starts in like, a few weeks. My sister's children who are out in Austin, Texas, they start in, I think, 2 weeks. They always start early out there in Texas. It's just crazy. Like I said, like they got like 2 weeks left. So some of you out there may be getting ready in that back to school spirit. I'm still fighting. I want this to be summer for longer. So, yeah, well, crazy. So, started off the week with a bang. For lack of any better word than it, oil has just absolutely just been just decimated in 2 days. We'll talk about that in a little bit. If you caught our session earlier this morning, we talked about how it took 11 days to go up and 1.5 to go back down again. A very typical crash in the markets. But we have found a bottom, so we'll cover that today. We'll also talk about the indices. They're going to be in some, kind of an interesting predicament as we kind of roll forward. We have two conflicting kind of sources, or not sources, but I guess factions at this point, right? We have the Delta variant, which is just, again, just wrecking Florida right now. And then at the same time, we have the economy where we can't find workers. We don't have overseas people, and again, Lollapalooza. Just this weekend up in basically the back to normal side of things too. So it's been a crazy week as well as it's first week of the month. So that means non-farm payroll, which again is the single biggest kind of focused on economic news release. So that's always pretty exciting as well when you go into a non-farm payroll week. So with that said, let's just jump into things today. We'll kind of dive in faster than normal. There we go. So for those of you that don't know me, some of you may have been attending the morning sessions, and I thank you guys so much for attending those. They're such a blast to do. Todd and I are always looking for ways to make them better. But if you found us through them, welcome. For those of you that do know me, again, you guys hear this every week, and I appreciate it. But this is more for the new people that are joining us. And again, each week we do have more and more new people, and I love getting the emails from the new people. It's always great to hear where you guys are at with your trading. And again, if you have problems, I love helping out as much as I can. But for those of you that know, you guys know that, or that you don't know yet, but the way that I analyze charts is a little bit different. I'm not throwing indicators all over the chart. So you look at my chart, it may look rather bland. You'll see a bunch of boxes. Those are again, I'm a price action trader. Those are supply and demand areas, if you were wondering. I typically will get one or two of those emails a week where it says, what are those horizontal boxes that you keep drawing out there? Those are supply and demand areas. They're buy and sell areas for me. I am an if this then that trader. I just want to, this is my personal disclaimer. I do not have a crystal ball on my desk right now. I cannot what's going to tell you what's going to happen in 10 minutes from now. I do occasionally make comments like yesterday, like, I don't think we're going to drop to 70 in one day, but be bearish. And then somebody's listening out there because we dropped to $70 in one day. So, occasionally, again, some of the things that I say, um, it's amazing how fast the market can really bounce things around. But I like to keep it, my strategy simple. So that's what we're going to be focusing on today. I've been trading since about 2000. So, again, I'm not here to toot my own horn. I've been around. I've seen a lot of different things in the market, ups, downs, left, right, sideways. I haven't seen charts go left, right, but I have seen them go to the right side. So, I've created a number of different programs. I know everybody out there is different. Again, with what they like to do. I'm a big believer that there is no best asset class to trade. I don't care what asset class you're trading. There's always something additional you can add, something that you can get better at. There's opportunity everywhere out there, and for me, that's what Nadex is. I absolutely love the idea of options. I started with traditional options. Nadex brings it kind of one step forward, and even I think even a more simple way than just trading traditional options. Less moving pieces, right? It's pretty easy. Again, I think it's something that really all traders should be able to get in there and start trying. Um, I have worked with one of the big three advisory banks as well, so I've kind of seen this from the inside as well as the outside. I got to actually go down to the bank's trading floor and kind of see what the you know mission critical, mission central, whatever it's called, looks like. I learned a lot about bonds over in that arena. So although I didn't stay there very long, it wasn't what I thought it was. I did get a kind of a broader view than just what it looks like from a retail trader. I did work in New York City. I used to walk past the New York Stock Exchange every morning. My office, actually, I could look out my window and look at the bull and all the people that rub its nose and and its butt. It's kind of funny how it works out. Um, again, there's a picture of the three little ones here. They're not as little anymore. That picture is about 2 years old. You guys know that I have a beard now from COVID. Not that I didn't get COVID, but everybody grew a beard in COVID. I just haven't gotten rid of mine. Um, Both those boys are probably about 8 inches taller. That baby is now 3. She's all over the place. She's milking grandmom right now to take her shopping. So she's at that stage. And again, we have a new little one on the way in like a month, 2 months, 2 months, October. I have a fourth one on the way, another little boy. So that's me, in a nutshell. So with that, let's go forward and let's cover our disclaimer real quick because we are talking about charts. We do talk about money, so got to make sure we cover this disclaimer. For those of you out there, you guys already know this, though, that trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost of their transaction, including fees. You should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trade decisions that you make are solely your responsibility and at your own risk. Do not send me an email and said you said to do this, because that's not what I'm doing today. Today's about education and teaching you guys how to look at charts the way that I do. Past performance is not necessarily indicative of future results, and none of the material presented here is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. All right, so here's our agenda for today. Upcoming news events. As I mentioned, it's a non farm payroll week. Every week I say this, and every week someone's like, wow, you're right. News trading is absolutely, in my opinion, the best time to trade. It's a catalyst. It drives the markets. It moves it around. It's absolutely a blast to trade. Yes, there's increased volatility with it. Yes, there's an increased risk level to it. But I'm just one of those people that I don't have necessarily a ton of patience. If I can kind of hit my daily target in 30 minutes because of a news release, I'd much rather do that than have it take 4 days and then be 4 days behind what my goals are. Um, but what we're going to do today is we're going to analyze the upcoming news events for the rest of the week. There are a number of them this week. Again, first week of the month is always big. It is the last kind of summer reading. After this, we get into September and it's kind of back to business and things are a little bit different. But we'll see what we got. Then we'll break down the indices right now. The indices are kind of a little bit mixed today. They've been a little bit crazy. I also did add the Russell. Before we had not been analyzing that one, but I did throw that in there for you binaries traders out there. I know you guys, you tend to like that one. Where we are in the economy, the economic recovery. I did think that it made sense to add it. The reason why is as recovery happens, that tends to be a bit more volatile. There tends to be a lot more movement, and again, maybe it gives you something else to look at that you guys haven't previously looked at before. Then we're gonna, go to my bread and butter currencies. I absolutely love currencies. There's a lot of news events. I told you guys if you attended yesterday, you knew that the Australian news super early this morning for me, but late for other people. Was a big event, and again, we had some decent movement off of that. There's another one tonight that's really, really important, and I'll cover that in the upcoming news section. And then, last but not least, we'll cover commodities. Commodities being gold, silver, and oil. Now, like I said, oil has been slaughtered. It is bouncing back again, but we'll see kind of where we could go from here. Right. Earlier today, I talked about finding that bottom and getting long, and again, it's been basically straight up since that time. So we'll see what else we can find. All right, with that said, let me jump right over, pull these charts up right here. All right. So, as you guys know, I always start off kind of with Forex Factory. It's easy, everything's right up front. I use Daily FX as well. Both of those two are up there. And again, particularly for news, when there's something that I don't see, this is my go-to as far as kind of what what the like, the real-time latest breaking news is, as well as if you guys are unfamiliar with this, all these you can kind of get, and when you hover over a lot of things over here in Daily FX, you see how it gives you the client consumer sentiment? If you've ever heard us speak in the morning, I do actually like to look at this a lot. It's very telling because this is taking clients, right? Clients meaning retail traders. Retail traders are the little fish in the pond. When this percentage gets a little bit too far out of whack, it tends to be a telltale sign of where prices are going to move. You know, nothing's perfect, but a lot of times you'll see 80% of people long and the thing is just tanking. It's just going through the floor. So it does provide some opportunity out there. And it's one of those sites that actually gives that information out. So, something like this with gold, right? Everybody is just, long gold right now. Again, that provides some very interesting short opportunities out there. So again, I use both these two. But to start off today, again, just kind of getting that kind of bird's eye view look down, you can see that in the currency realm, I love this 24-hour pip change. Again, the world is a global economy, right? The world does not revolve around the United States. When you look at this, you can see that there's really no currencies out there that are really just going gangbusters and blowing everything out of the water, right? You can see that, kind of on the euro front and the, euro dollar, pound dollar, we're kind of mixed there, right? We are seeing a little bit of pound strength. We can see the euro pound is down, pound yen is up, pound dollar is up. So it looks like that's got a little strength in there. But at the same time, again, this is kind of some dollar strength here. But again, dollar weakness, dollar weakness, dollar weakness, dollar weakness. Actually, this is dollar strength, but again, it's retracing in the last 60 minutes. And then again, dollar weakness against the Aussie dollar. So, a lot of stuff out there. All right. We saw the Spanish unemployment came in much higher than expected. Again, that's not one of the typical things that I follow. Being much worse than expected, again, you can see that there is weakness coming into the euro. There's not really anything else today except for the employment change, which again, we can't trade New Zealand over at Nadex, but you can trade the Aussie dollar, which acts as somewhat of a proxy. We are expecting rate changes in New Zealand for this month. The Aussie is kind of lagging a little bit behind from where it normally is. Now, I did mention later on that there's going to be a big release. Retail sales for Australia is a great release to trade. It is expected to be a negative number, and again, it was expected that it was going to be negative. We know that last month they shut down 4 of their 8 major cities, just because again there was increasing COVID beyond what they liked. And when I say increasing, it was like 38 new cases. It's not like the 11,000 hospitalizations that Florida has. They've been able to maintain a bit more control, so um, it's one of those things. Because it's a negative number, the market is now prepared for that weakness. If this comes in even at a minus 1.5, it's still negative, right? It's still worse than it was, but that's not as bad as what the market has forecast. That's an opportunity for us to get long the Aussie dollar or the Aussie yen because, again, it brings strength back into the market that the market didn't prepare for because it didn't match the forecast. So even a negative number could be positive, and the fact that we don't have any conflicting news at the time, great opportunities tonight in the Aussie. It's some of my favorite trading at night. Okay. Um, tomorrow. Tomorrow is our first reading on the ADP non-farm employment change. Okay. Now, if you didn't know, ADP does, and actually, my first job out of college was working for ADP in their small business unit. It was interesting. Back then, like the statistic was like 1 out of every 4 people at the time received a paycheck from ADP. So ADP's number is based off of what their data is. There's obviously other payroll companies out there, so it's not the total figure. That's what Friday is for. And again, it does give us that kind of that first gauge. But you can see when we click on it, the last 2 have been, pretty decent, right? Higher than expected. This time they've made the big jump up to that 645 number. We'll see if we can continue to push this through. Now, again, what makes this interesting is with all the Delta variants and things like that, we haven't really heard about shutdowns yet or layoffs yet or lockdowns. And again, I don't really feel like we'll get back there again. But this could be a pretty interesting number and set us off. Now, if you're an indices trader, right, this is a pretty good release for you to be looking at on Wednesday. Okay, because like I said, it is a red. It's considered a very high impact trade. And then at 10 o'clock, it's kind of like like the old Batman TV shows, the bam, boom, bang, wang. That's exactly what's going to happen here, right? We have one at 8:15 before the market opens. Then the market open will react to that, and then right after that at 10 o'clock, when we get to that reversal time, we could potentially swap right in the other direction and go right where we went with ISM services, which is also a very important number. Now, ISM services is forecast to actually be higher than it was before. If this number looks great, but then this one is comes in at like a 56, it's kind of like, huh, that's not what we were expecting. We could have almost an immediate reversal. And again, you want to make sure that you're protected in your positions. Right after that, we're followed up by crude oil inventories. Don't forget, today, okay, the API industry report comes out today in preparation for this EIA number tomorrow. All right. So, you know, last time it was quite a miss. It was supposed to come in as -2, came in as -4. Now we're projecting -3. We'll have to see what it looks like. And again, you can see over the last, what, month? Since June, right? Here's all our forecasts, and we keep coming in with green numbers. Bigger down draw, bigger down draw, bigger down draw, all of a sudden a surplus, and then a bigger down draw yet again. So oil is just, like I said, we'll look at the oil chart, but I mean, $3.50 in 2 days is a lot. When I say 2 days, I'm talking about from the Sunday open. So not even like US trading days. It's been like a day, really. But it's a lot, right? So we'll look at that one. That's a release for tomorrow. Now Thursday, this is where we kind of get in a little bit more into the currency realm of things. All this UK news, right? Monetary policy reports, the monetary summary. They're not going to change the official bank rate, so we don't have to worry about that. But every single country out there is talking about three things right now. One is the taper, right? When are they going to start tapering asset purchase? Two, when could they potentially raise an interest rate, right? And three, obviously, is kind of what we're dealing with, what kind of their COVID infection rate is. Um, and kind of the COVID risk. Now, the UK, there was an article last week that talked about how they've already peaked with this Delta surge, that they thought it would be much worse than it actually is. Again, remember their vaccination schedule is a little bit different than ours here. So we can't draw apples to apples, unfortunately, on that one. But again, could be a big, big mover. And the pound has been, the last week probably, has been retracing a lot of losses that it had in prior weeks. So giving us kind of a big look out there. Number two, we have unemployment claims. Obviously, unemployment claims will kind of give us an idea of really kind of where we're seeing. I know there's a cliff. People have talked about this unemployment cliff coming up as states are going to pull back all the additional assistance, forcing people to get back out there and work. That number hasn't quite shown its head yet in the unemployment claims, but I do believe we will see it sometime soon. I don't think it'll be in this one. I think it'll be in the next one. But again, could set the tone for the indices. So if you are NQ, ES, YM, Russell trader, these are all things that could dictate what you're going to be doing on Thursday. And then 7 p.m. we have 7 p.m. and 9:30 we have that Australian data that I've talked about again, right? Again, people sleep on this. I can't tell you how many people that are like, yeah, I never looked at it. I've just never done it before, so I didn't want to kind of get in there. Go into demo mode. All right, all of you guys can get free access to a Nadex demo account. It's monopoly money. It doesn't cost you anything. Go over there and try to trade some of these at night. These are absolutely amazing opportunities. Back when I still had the 9 to 5 job, but was still trading, I used to trade these like almost exclusively at night. These were great to trade because again, you don't have the U.S. influence, you don't have many overseas influences. It's basically the Aussie versus everybody else at that point. So it tends to give pretty decent news trades. And again, it gets in a trend, it goes in the overnight, and then again, once the UK session opens, it tends to reverse or, we'll flatline out. But it gives you kind of a one direction trending type, ability at night. Monetary policy is great. Low speaking is great. He's going to talk, give us some news, let us know how the recovery looks. And again, it's one of those things. Am I telling you have to become a currency trader? No. But if there's an opportunity, should you at least look at it and investigate it? Yeah, you guys should absolutely look at these at night. And then the big day on Friday. So Friday morning, we have Broadbent speaking. Now, Broadbent last time was definitely a market mover. Definitely a market mover. So is it going to happen this week? I'm the way that I'm looking at this is I'm being as positive as I possibly can. This is a UK session news release at 7:15 in the morning that I don't have to wake up at 3 o'clock in the morning to hear. Right? It's 7:15. It's in Eastern Standard Time hours. Take advantage of that. Right? Dollar US, dollar yen. It's on Friday. Look for the call spreads. Look for the shorter duration binary contracts. Heck, even look to see where any of the knockouts are at that stage. We have a lot that we can trade, and there's no other news after this. As far as the UK goes, this could be a pretty nice mover on a Friday as they're closing out into the weekend, right? And then right after the 8:30, bam, we slam right into the Canadian news. Now, we've talked about Canadian, the Canadian economy coming back, and again, it's been beaten up. It was driving higher. Look at this. A 7.4 forecast, and the previous was 7.8. They are dropping zero point 0.3 percentage points. And again, New Zealand kind of did the same thing last week, right? That's a big jump to the downside. They're not hiring back as many people, but that unemployment rate coming down, that could be a pretty nice CAD mover. Now, the only asset we can trade it with over here is dollar CAD. And again, it is going to conflict with the next three on the list here. The average earnings, which again, average earnings is great. Gotta love when you see 0.3, right? The average worker in the United States is getting paid 0.3% more this month. And that's a wonderful number. I think it's great, except when you see inflation is 5%. So, yeah, I mean, think about that. If all our goods and services cost 5% more and we're getting paid 0.3, should you be celebrating that 0.3% raise? Not so much. Not so much. Non-farm employment change. 855 or 895K is a huge number. Last time it was 850, right? And again, we did have disappointments in June and May. I know this is one of those ones that, we're continuing to see it again and again. I've mentioned it in the past. I know a couple different people that own restaurants. They just can't get in place. So hopefully this non-farm employment number is going to stay this high. That would be a great way to have a feel good Friday. I mean, if this thing can top a mill, that would be incredible for Friday. It would definitely be an opportunity for us to kind of get to new highs in basically everything out there. Now, U.S. unemployment rate also is supposed to come down by point 0.2. The problem with the U.S. unemployment rate coming down point 0.2 is it's basically set up for a big move. Okay, we already know that we can't find people to hire. We've had that problem, and it's kind of, I mean, if you look at it, it was supposed to be 5.6 last time, and it actually went up. Now they're saying, oh no 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 no, we were right. It's 5.7. And maybe there'll be an adjustment, but I would say that if anything, this one stands to be some type of a miss. It's very unlikely that they're going to get this one right on. And again, 5.9 to 5.7 is not bad. Remember, it was supposed to go 5.9 to 5.6 last time, and it was a disappointment. Um, I wouldn't be surprised if we see like a 5.6 again, um, just a little bit lower, right? Maybe even a 5.7. But I mean, like a 5.8, 5.9, where it doesn't really change, I think could have some major problems as well. So that's I think the unemployment rate is kind of like the hidden like landmine, right? The hidden trap on Friday as far as US news goes. Earnings can be great, and at the end of the day, the earnings don't matter because inflation is far outpacing what we're getting paid. Non-farm employment change is great, but again, we'll see what the unemployment rate does. And then after that, we have CAD IVPI, which doesn't really affect too much with the CAD. So that's kind of the week that we have. And again, pretty blockbuster week as far as major news releases. Is there 50 of them? No. But are they all? I mean, when you talk about retail sales, monetary policy statements, and non farm payroll, I mean, you're knocking out like 3, 4 out of the top five, right? Market moving releases. And don't forget, I don't have it on here because because this is a Forex based site, it doesn't necessarily count it's not a major Forex mover. Natural gas on Thursday. Natural gas has been moving 2% up, down, left. I mean, it's just going all over the place, right? Natural gas has been a mover. And just like we have an oil inventory on Wednesday, we also have it on Thursday. Okay, so again, more trading opportunity news wise. So again, take advantage of it. All right, with that said, let's jump over and let's dive into the indices because I said I would do those first. All right, so let's start with the ES. All right, ES is I talked about levels of equilibrium. Okay, this kind of dashed line here is that 4,400 number. Okay, you can see what the reaction was. It hit it, then it based across it, came up, based again, came up and based again, sliced through it here, thankfully, then hit it and dropped, hit it and dropped, hit it and dropped, hit it and dropped, hit it and based, went through, set a trap, came back down and based, hit it again, came back up, went through, basically got pushed away, and now we're sitting at that same level again. Now, we do have a short trade in here, and this short trade has not triggered yet. We've been waiting for a break of 43.68. We got close here. Again, this one peeked its head in and popped right back out again, which is not our entry. We just had the same scenario yet again in that level right here, where we shot in and came right back again. A very, very kind of fast spike in right at that 9:30 window. So I would say I would keep an alert on there that 43.68 when it does break through. Again, if we can get any type of basing and a pullback in there, I do think we have a short in there until about 43.50 to the downside. Right now, with this basically shooting straight up, being at that 12 o'clock window, you can see this level. I mean, this is an area of interest level, right? It was a piece here. We based in it, touched it, and went higher. Came back in and used it at the base, and then dropped. It's just slightly higher than where we are. The question is, can we get through that, and can we start testing some of these limits over here, right? I would say right now we're kind of, and again, I used the Fibonacci tool recently. Um, Basically, I used the Fibonacci tool yesterday for some pictures inside of the deck that I'll be using next week at the Education Summit. So unfortunately, my three zone tool is not set up for right now. But I would actually be looking for this one. If we can't really push much higher than this, I'd almost be looking for kind of somewhat of a rollover. I mean, right now I don't know. I mean, if Florida breaks another record tomorrow, like they had 2 days of record breaking, I mean, I don't know. I mean, how many days? I mean, New York just went full mask, right? Full mask. Maryland went full, we have to go full mask indoors at government facilities. Florida's had 2 days in a row of record breaking, again, higher than what it was this time last year. Hospitalizations, We keep hearing about this. That's going to be putting a lot more negative pressure on this. This equilibrium level of at 4,400 is going to probably have a difficult time coming through. So, really, if we can get up and start looking for some basing, I would be looking for some rollovers. But you can see, really, everything just keeps getting sucked back. I mean, we're pretty much inside of a channel if I was to draw it. I mean, you got from here down, it's just up, down, up, down, up, down, and we're kind of sitting right in the middle right now. So, it doesn't have as many opportunities for us right now. But I would say 4420-ish range. Again, there's a few traps up in this level. I mean, every time it comes through, I had this little trash can there. I was like, hey, there's a major trap right here. And it did. It turned and rolled right back down again. Um, I would say the fact that we've kind of hit that level 3 times, I'm going to leave this red one up here, this 4420 to 4417. It's hit that level 3 times now. It shouldn't have as difficult of a time going through it again. Okay. So the next time we break, if we start to get a base up top or even a punch through and then a pullback a bit, that's going to be a trigger for me to go long. And again, that's going to be approximately in this 4422-ish range, right around in the zone up top here, to be able to take that long. NQ. NQ also just happens to be right at the 15,000 mark. We're at 14,996 right now. And kind of the same thing. We talked about levels here. We were talking about shorts, right? If you were short from up top, we were talking about 14,914 as being the target. As you can see, what did it do? It hit that target and then bounced back up again. So I can remove it now because, again, the target's already gone. And we talked about having a nice little buying level. And all it did here was it hit 930. It came down. It made another attempt. It did not get stopped out. And then basically what at 11:30 launched itself higher. So again, this was a nice little position had you been in it. And again, remember every single trade, at least for me. And again, this is not giving you recommendations. This is me just telling you what I do with my students. 1 to 3 is the risk to reward ratio that we need. That's all you needed to move to have this be a risk to reward, a decent kind of trade setup. You can see, I mean, the entire move just to spike up was a 1 to a 7, meaning for every one that you risk, you had a 7 profit potential or a profit on the other side. A lot of things you can do with that. And again, those 2 hour binaries you could have set this one up with. Again, the 10 to 12, right? Let's see. I'd love to do this measurement here. Had you taken the 10 o'clock here, because again, we were touching the zone at 10 o'clock, right? Actually, it was a little bit after 10. 10 open and then pulled down. Let's see. Your 10 to 12 binary ended up being. It closed 141 points higher. So you may say, what can I do with that information, Brian? Why is 141 important? Well, go over into your Nadex platform, look to see what the 2 hour strike differential is in the NQ. And then you tell me, and again, if you guys want to type it in the chat, please do so everybody can see it. How many strike prices were hit from here to there? Okay. Go ahead and type it in the chat when you guys get the answer on that one. I'll tell you, it's more than 1 or 2. And again, the 2 hour shorter duration Nadex contract. Okay. And again, this is why it's so important to know where these levels are, particularly at the open. Okay. Right now, it's kind of the same setup, though. Again, the next big major level is going to be up top. We got a little bit of an area of sellers at 15.5 or 105. Being smack in the middle, we're kind of in no man's land. But as much as this popped, I would expect it to roll back down again. It's kind of that whole parabolic retracement. You guys have seen that webinar in the past. Again, this absolutely moved more than 1.5 times its ATR, its period ATR. You can see that it's really spiked it up. But the period ATR is 39 pips, even with that candle in there. I'm sorry, 39 points. And just the candle itself was 127. So, yeah, quite big, quite big. I'd expect more of a retrace than anything else. And again, this level now, it's been hit 2 more times, so I'd be a little bit more cautious. I may actually wait till that one comes a little bit lower later in the week. The 14,735 is decent, as well as this area down here at 14,810. Now, YM. YM, we actually had a trigger down here. Now, this one, these are the ones that just frustrate you, right? We knew we had that area of interest, and again, what did it do? It tagged that area of interest and went higher, right? And then it skyrocketed. It just dropped. The 930 open sliced through that zone. We've been waiting for this 34,687 for like 2 weeks, right? We've been waiting for this one for a while. Now, had you taken this with a binary or a call spread, you still could have used the same short duration contract. You would have been fine. Okay. This is one of those examples where if you are a Nadex trader, you'll love this. If you are a futures trader, you not so love this, right? Because had you put your entry here, your stop loss at the other end of the zone, guess what? You got stopped out. Had you taken a binary, you were golden. Had you taken a call spread, you were golden. Had you taken a knockout with a piece down here, and again, I'm not sure where it is, but just in general, if there was a knockout somewhere in here, you got knocked out and you were taken out of the position. These spikes are very, very common, but kind of the same thing. Huge, huge push up again. This one I actually think does have it has the ability to go higher. As you can see, it did run into an area right here with that kind of like triangle top that I like. This little piece here. So it did turn where it should have. But any more positivity in this one? And again, this is the strongest. It's up point 0.4 versus everybody else. I think this gets. I think this has the ability to get back up to the equilibrium point, which is at 3,500. I'm sorry, 35,000. But yeah, I was disappointed when I saw this. I was like, man, I was like, that's the one we were looking for. It sliced through. It ended up grabbing the buyers just a little bit lower. But really, the next level until we have like really, I mean, really tested would be all the way down here. I think at this point we find some stabilization. There's a couple points in here that we push back up. I think this one comes back up in that 35,000 to 35,035 range. Now the Russell. As I mentioned, the Russell's a bit more volatile, right? Yes, we talked about that kind of hit yesterday, right on the second, and again, it just dropped down. This one did the same thing. It came up in base and dropped. The opening candle was more or less straight up. Again, there was so much negativity when the retail trader stepped in. This one was harder to grab because, again, I'll drop it down to a 15-minute. You can see that we had these levels in here, right? Right here is kind of where the testing was, right? Test, test, and test. It was hit number 3. It was right at 10 o'clock, that like 10:15-ish time frame. If you are a Russell trader, this would have been a great setup. Had you not been a Russell trader, like if you were not familiar with the way that this one moves in comparison to say the Dow, the ES, or the Nasdaq, this one would have been a little bit riskier for you to get into. It would have felt weird, right? I mean, it was collapsing very, very fast. This is what makes trading hard, right? Um, if you guys know, like the slogan on the company is, talks about how trading is simple, but it's not easy. Well, the not easy part on that kind of slogan that I have for my company is it's very, very hard to buy this when you're seeing this inside of the Russell when everything else was starting to flip negative as well. It was a decent setup. You got to be aggressive with it. And again, that's why this is not for everyone out there. But it's had a decent push, just like the other ones. We're far enough away from its equilibrium point right now at 2250. This one, actually, I am feeling a bit more bearish with it. The fact that it came up and it's grabbing those same sellers that really started this drive down at 930. Again, I feel like all the profit taking happened and they're going to try to jump back in again. And I feel like this one ends up down in the 2180 range today. Or at least that's where we probably see the next level of basing. And again, in all fairness, I don't trade the Russell as much, but it's one that I can analyze on here. And again, could you have stepped in? Absolutely. The same thing we do for everything else. It had its 2 touches. It had its front run. We were looking for that as an area where there was potential buyers. And again, for the indices, we used a 15-minute chart, came down, grabbed it, and took off. All right. All right, let's dive over into currencies. Now, currencies is a little bit more, little bit less exciting right now. So we talked about this parabolic move yesterday. It did. It parabolic retraced all the way back down again, ended up grabbing those same sellers. And then really since this morning has been off to the races. And again, this is the dollar. So you may be wondering why this dropped so fast, right? Well, there was Australian news last night, right? There was Australian news that really sent this thing tumbling. Right here, right? And again, actually right here's where the news is, right here. See the second green candle right here? This is one of those times where if you understand how to trade news, you may say, well, I mean, I don't like news. It's dangerous, right? Yeah, okay, it's dangerous. But this green candle right there is where the news came out. We knew that we had news, right? We also knew we were in an area of selling, which, again, we had been talking about for many days, right? We talked about that area a few times. We had a parabolic move because of the news into a 30-minute level, which leads us to the reversal, which completes the parabolic retracement move. If you have no idea what I'm talking about with parabolic retracements, please go check out the webinar on that one. Again, this was a textbook setup for the parabolic retracement strategy. Okay. Now, what I would say is watch that level again. I think 74.05, the way they reacted at base, they pulled up and didn't get back up to it. There are probably some more sellers in there. Again, there's Australian news tonight. Look at them sitting right over in that range. And again, if we're up in that news, it's another potential short. What does that short look like? Well, that would be dollar strength and Australian weakness. If the report talks, it comes in worse than expected because of the lockdown, right? It's expected, it's supposed to be not supposed, but it's forecasted to be a minus 1.8. If it comes in at minus 2.3, that's bad for the Aussie. Again, that gives us another setup to the downside. So watch out for that's the level later on, 74.05. Okay. Buying side, again, I'd wait for this to come back all the way down here. This level's been hit a few times, the 73.58. So I'd wait for it to get a little bit lower to get something clean. Or we got to look to see where it's at if it's in a minor level for a session open. Now, also, again, kind of the same thing as well. You know, we were looking for a base here, and again, all it did was it gave us kind of that little bit of a base, and it started base, and we're like, yeah, yeah, this is good, this is good, this is good, but then it popped away and formed kind of a new high. Unfortunately, so we were looking to get short, but this one spike up kind of took it away from us. There was a level in there. You could have taken this level right here, right? And again, spiked into it, kind of a parabolic and actually a continuation move. And now we're kind of in the same spot. So I would say Aussie yen is interesting. And again, you know, you can mark off this with a new level here for tonight. We're a bit close to it right now. We're only about 17 pips away. It will slow down. This one doesn't move as much in the afternoon for the US session. But again, another opportunity. The Aussie yen is a great one because again, you're trading against the yen, which is considered weak. If you do get some positive U.S. data or Aussie data, this one has the potential to spike back up again. And again, if we get a very big spike, 81.90 is a good reversal level they're looking for. We know we have some sellers sitting here at the 81.03 level. Again, they've hit it twice and kind of forced it back again. And again, I would say there's probably an intermediate level here as well. A lot of basing, which makes it not as fun for me. But it dropped and came in and based again in that same level. So you have a potential area there at 81.42. So a lot of different news setups for this one. Again, for the Aussie news tonight. Euro pound. Euro pound's just kind of doing its thing. It's just bouncing back and forth. Yesterday we were sitting right here. Right. We talked about that level. We said that we had been driven down before. We came up. We based at it. Actually, we were sitting right here, right where this little green candle is, where we were talking yesterday. You had two more entries, and it's continued to push away. At this point, this one is you're already done. I mean, it's already out, right? Your 1 to 3 is right there. Okay, so trade's done. It's out. I would say wait for it to come down to 85.13. Um, it's pretty much the next time where we have decent buyers. It's in a zone right now. You guys can see it. It's pretty easy to see. You see this red dash right here? It's in an area right now, but I mean, again, it's kind of come to the top of it. It hit it again, and it hit it again, and now we're basing. But it's just not enough to be able to say, hey, listen, we should take this one short. It's 13 pips. So it's just not enough movement. Wait for it to come or either go down or kind of grind its way back up again. And maybe we look for a potential entry up here again at 85.55. What is it? 85.53. Okay. But again, this was a pretty easy setup. Again, late last night and then was done at 7 o'clock this morning. So just a grinder to the downside. All right. Euro yen. Kind of same thing. So this is one of those ones that just kind of it's like so we talked about getting through this 29.54. Okay, we talk about it coming in and basing. There's our base and our turn. Okay, now this is 1, 2, 3, and 4. This is where we would have expected it to break. It didn't. It dropped, it based, love the base, and then we typically have our trigger to go short. It ended up going higher. So again, this would have hit number 5. Okay. My riskier traders out there could have absolutely taken this one short because again, we've already pushed it to the brink. We knew it was broken. We knew we had the base. We had all the pieces. It's just that the pullback went much higher than down here, right? It did drop. It did over its 1 to 3 risk to reward target. It's already over. There's not much we can do with it right now. You can see it kind of based here, but we'll actually move that down a little bit and watch this zone next. Okay. Kind of a hard level, like I said. Change this now at this point. This trade is already done. Unfortunately, there's not much we can do with it. But I would say, as far as areas where we can take reasonably, nice longs off of is 128.74. We have a decent base here. It is not the original hit. It's got a little bit more space, but I would say that watching the level at 129.78 is another level that we'd be interested in. I want to see what it does if it comes back up and bases through here. If it just slices through, then we'll delete this. But if not, I want to see kind of what it does. And then again, up top, this 130.43 is the next area. Once we get up, messing with these sellers here and here, like that one. It's going to be the challenge of going from 129.78 to 130.45 with this level is going to be a little bit difficult. But I do like that for shorts later on down the road. Okay. So again, this was a trade we talked about yesterday. If you got it, awesome job. But yeah, this would have been hit number 5 on when number 4 pushed through the break. Okay. Euro dollar. Yeah. Don't get me started on the euro dollar. So 1900. I'm sorry. 119. Right. I'll say 1900, but 119 was really where we're looking for this one to come to. It drove up. It was well on its way, right? We got there at 7:30 this morning. I'm like, this is it. We're going to hit. We're going to hit. We're going to hit. We're going to hit. And it didn't. It rolled. So this is the one that had the really, really funky gap. If you missed this one, it gapped all the way down here over the weekend. So we wanted to make sure that we had kind of a profit target before those buyers of the gap, because again, it will fill the gap. But we were looking for a decent level to get short. This is one of those situations where we did get front run. If you were a bit more on the aggressive side and you use this top here, right? You got into this trade, you were good to go. I had talked about the more conservative entry, waiting for it to go a little bit higher up the curve. I was hoping that it was in close enough of a range that the kind of magnetism of having all the zeros would have sucked it up to the whole number. Unfortunately, it didn't. This one left without me. But again, if you were aggressive, we were looking for a short position, and again, it did drop. I would still hold firm if you are short. Again, I think this is a very important number to mark off. 1832. And again, your numbers may be slightly off. You want to make sure that you had this a pip or two before the start of this gap, because there was buyers that stopped this. You don't want to mess with those buyers. But that's where your short entry should be. And again, if you caught it, I applaud you. Again, sometimes being aggressive is what gets you into the trade. My opinion is, yeah, I'd rather miss a trade by being conservative than over trade and be aggressive on everything. I mean, there are times obviously when I can be more aggressive, but it's everybody's risk profile is a little bit different. You got to make sure that it matches yours. If you were aggressive, you were looking for this area. If you were conservative, you were waiting for the top area. You know, it could have came up and grabbed my area. This person would have got stopped out, and then they would have had to take a second trade to get short. So there's pros and cons of both sides of things. You got to figure out what's going to be best for you. But right now, if you were short, 1832 on the bottom is the next decent level. And then again, if we can get a decent base there, I could be swayed, right? For non-farm payroll, I could be swayed, right? To start pushing higher. Now, pound yen. All right, so pound yen. There's a bunch of different things over here. This is another one of those ones. We had a level, and we talked about it. There was 1 touches, 2 touches, 3 touches. We expect the break on 4, which was the green, and it did. It broke, right? We also said if price was able to get down to 151.36, we'd be willing to get long. So this is those frustrating ones where it literally spikes down and comes right back up again, and then sends a sucker for a runner of about 43 pips. That was not there. Again, you guys can see the broken zone here is exactly what we bounced off of. So I would say, as far as kind of untested clean levels, we obviously have a level way up top that we've been looking for, the 153.46 to 153.05. Downside, we like this area at 150, although the one thing that we had marked, and the reason why this is hollow, is because this was a level, and again, not to say that it can't base off of it, but when it eventually does break, 150.73 is a trigger because of this, right? Because of this. That is a racetrack. I'm looking for price to break through there and drop all the way back down to this lower level. It's well beyond the 1 to 3 risk to reward ratio. I'm hoping it kind of rolls back down again and starts to base in here, but I'm looking for a base and then a drop through that. Short position. You guys can see that this one is 1 to 3 is right there. It can go all the way down to here, this green level. So it's got plenty of room to run. Okay. Where we are right now, we're kind of in this kind of again, it's a parabolic move down and it's just retracing back up again. Had you been in this one, and again, had you taken this in a binary, a call spread, you're golden. Had you taken it in a knockout, again, if the knockout was in that zone, you got stopped out, right? Right now, I would say there's really not much we can do with it where it is. There's a I guess a case that you could get short at 152.11. But right now, we got a bit of room to run for that one, and the European market is now closed. It's got 30 pips to go, so could be a decent one next time we get up there. I would not be getting long off this 151.36 anymore. I'd wait for it to come down, and again, this area lower, I'll say the top side of that area is at 150.87. Depending on how we come in here in base, again, there could be a long or we just continue to take the short through. Remember, the telltale signs that this is going to break is we're looking for some type of a basing level in there. Versus if there's buyers there, it's going to hit and go up, and then you take the Harry Potter to the top. You take this little confirmation pattern to the top, up, right? Right. Versus most times when you see it coming and doing this, that tends to be where we go in the opposite direction down. Oops. We're looking for more of that. Okay. Remember those patterns. All right. Dollar. So this one is just channeling sideways. Here's where we are now. yesterday at this time, we were sitting right here, just a little tiny bit different. And the day before that, we were sitting right here. So basically 3 days of not a lot of movement. There's just not a lot of catalyst. We talked about short profit targets all the way back down here. We were talking about a short profit target at 38.18. We were talking about entries, and again, we've already had one entry and successful trade at 139.74. Right now, it's just trending sideways. It's literally bouncing back and forth in a channel. I mean, it's a decent channel. I mean, top to bottom, we're talking about 40 pips. Um, but right now, with where we are, again, we're stuck with some sellers and then a little bit of selling right above, and even little sellers right above. If you're looking for kind of like that clean entry, I think this is what we got to wait for, the 139.74. If you know how to set an alert, set yourself an alert right actually here, right? You may say that looks like it's a little far away, but the way that this got pushed down, I want to see when we approach this level right here. It may actually bounce off of there. I wouldn't enter a trade there, but I wouldn't be surprised if if that's what it hits. Okay, and that's where it rolls. But 139.74 is again potential entry, and again profit targets for shorts at 138.18. You don't want to necessarily mess with this level. Pound CAD. I'm sorry, dollar CAD. So looked at this level earlier and I said, hey, listen, we're getting the basing in here. We've hit the level again. We've come back up. If we start the base, look for that push through. So this one is kind of set up in one of those Harry Potter trades. This is that kind of what I was talking about. There wasn't many sellers. I mean, there's a few right where it kind of turned, and you can see what happens. It went up, went down, went up, went down again, and now it's kind of pulling back to that level to find more buyers. The clean entry up top would have been 126, 126.036. 126.03 is fine. We don't have to go to the fraction of a pip. The basing here is what kind of gave this one away. So it's not marked. It was only about 33 pips that it broke through the top with. It was a little bit dangerous. It didn't really give us the cleanest entry. Like, yeah, we love the base and the pullback. It went a little bit far. That's kind of where the profit target should have been. Right now, I would say, again, I still like the short lower of a break 124. I would watch out for this level over here. Again, we've touched it once, and then it kind of got front run. Is this a guaranteed buy? I don't know about guaranteed. I mean, there's nothing guaranteed in the markets, but I would say this is an area it's going to have to respect. I mean, buyers stepped in here and it got front run. I'd kind of watch it. It's not really a setup for me for a Harry Potter because we have buyers right below, but it could definitely be an area right past where this last push was where buyers could be stepping in. Because remember, if there were no buyers here, the price would have continued to push down, but buyers saved it. Question is how many buyers are left in the area again. And again, would I expected the base in here? Yeah, if it starts the base in here, again, look for it to go lower if you're looking for something small intraday. Okay. But right now, big trades for the dollar CAD are a break of 124.22 and 126.03. Dollar Swiss, we are just sleeping. You're snoozing. Okay, we're waiting for it to come down to 90. It's not there. In the overnight, European session started here. We drove down. We hit 7 o'clock, and we drove right back up again, and we're kind of in that same level. So, same thing we had before. I would say 90.75. Look for that level. It's been hit twice, and both times it's barely even breached that zone. Look for sellers to step in one more time there. That'll be hit number 3. So not as good as the last two, but again, full profit, full profit. Again, you got to respect that zone next time it comes through. So 90.74. Dollar yen. Dollar yen, we were looking for a bounce, and we did. We were looking for kind of that continuation pattern. Here it is. Again, remember, the hollow is where we're looking for Harry Potters. I said, watch out for this dotted line, just like in the other one, the euro dollar, right? The euro dollar, I'll go back up to it real quick in case you forgot. I said, watch out for the buyers. They're going to step in here. Okay, there's a reason why it gapped to those buyers. Well, the same thing is said to be true here. But what did it do? It broke through the Harry Potter level that we were looking for, right? And I was upset that we had a push down, but we're waiting for a pullback, right? It pushed in, it pushed up, and then it continued to push back to the downside. And what did it do? It tagged those guys, it hit them again, base, and then finally pushed lower into that 109.08 area. And again, this 109.08 area should have been our target to the downside in this Harry Potter. And again, you didn't get out here, it pulled back a little bit, but you finally got out on that position right there. Okay, so this trade turned into this to there. Whoops. Let's do it this way. And that was a 1 to a 3.7. Okay. So again, finding these zones, these areas of buyers and sellers, and counting how many times they've hit them is extremely important. It's always weird when it jumps through like this, but that also tells me it's not going to be as strong that it has the ability to break. And look, it didn't even slow down. It sliced through it like butter, grabbed those buyers, used them to pull back up again, gave us the Harry Potter lightning bolt, got us the entry, and then continued to grind through back down to the an opposing zone at 109.88. Right now in this one, I would say that it also does appear that again it wants to go back to the downside. For those of you that are big trend line people, yeah, you could draw a heck of a trend line right there where we just keep skirting along this trend line. So it's set up for more for a short than anything else. And again, until we get some decent data, probably tomorrow for ADP, I don't really see there being anything that's major, like, crazy dollar strength potential that comes back into this market. So that's what I'd roll with that one. All right, going across to let's go to oil. All right, so oil. For those of you that did not attend the session this morning, I talked about if we go back to the same price level here at that 89.90-ish level, right? It took this blue box, this big blue box, that's 11 days worth of price action on a 30-minute chart. Okay, so it took 11 days to go up, and it took basically since Sunday night, there's your gap on Sunday night, down. So in less than 2 days, right, we were able to kind of retrace almost the entire amount, right? Actually, we retraced the entire amount. So what it looks like on a daily basis and what we can do with it right now is, again, yesterday was just, again, a little huge scenario. There was a trade at the open yesterday, and then it got hammered. I joked yesterday about how I'd be bearish this position. We're seeing lower highs in here. We're seeing a very decent trend line down. There was a nice little buy here, but again, at that 10:30, at that 9:30 really is where it reversed. The sellers came in. They hammered it. This was, again, we've talked about little big all the time. This is a little huge, right? This was a little huge scenario. And then we just kind of retrace back up again. Um, if you love the idea of trend following strategies, make sure you guys sign up next week for the education session. I'm just going to say it right now. This pullback slash extension is one of the things that I'm going to talk about. I didn't use this as the example, but I could draw it on this one and we could use this as the example. Um, yeah, it's there. It's absolutely there. Um, as far as figuring out extensions and profit targets. So not surprised it hit that 69.84 in the grand scheme of things. I joked that I was like I'm bearish, but I don't think it's going to 70 in one day. There is somebody out there that listens to these things because somebody drove it to $70 yesterday. I also mentioned this morning, and again, drop it down to a 15-minute just to make sure you guys understand. And if you don't believe me, there's a recording. Go back and look at the recording. 9 o'clock is when we put the session on. All right. What I said was, there's where we were. What I said was look for stabilization and look for a failure to go lower scenario. Okay, so this is what that looks like. Okay, here's the low. Okay, right? I'll bring it down to a 5-minute just to make sure that everybody can catch this one today. Okay, huge push. We're waiting for this one to come lower. There's the low, right? We watch price pull away. There's a low that did not go as low as the bottom here. There's your failure to go higher entry. There's your established level of risk. Here is your long position. And again, this is a 10 o'clock entry right there. And you can see 1, 2, 3 is sitting right there. Okay. So are you out of that position? Absolutely. Even though it was straight down, we were actually at minus like 2.5% or something like that at one point. That's how you end up trading these things. Huge downward push in price. And again, when we talk about setting these up, you guys see these patterns. You may say, what the heck are these black lines everywhere? European session is one. US session, we tend to retrace, right? Same thing. This one ended low, but then went high, right? This one kind of went high. And again, it does happen. There's never anything that works there every day. Here's another one down in this session. And then bam, we started the session here. We go right back up again. Well, it's kind of the same scenario here. This session drove straight down. If I took the orange box, I'll remove this off. I'm going to head and use this as my orange box, right? Right now, that's where our orange box is. Let me put it at 1430. If I was to draw the pattern today, there was the driving force down. The US session took it over, and there's your retrace. Okay. So a lot of these are about finding the correct opportunities to get in. With everything that's going on with the Delta variant, what we've heard everywhere else with, OPEC plus and everything, I would say that, yeah, probably more bearish today, kind of similar to what we saw yesterday. A lot of this has been profit taking. I mean, 2 days in a row, every retail trader was like, holy gosh, it's down huge. I got to short this thing. I got to get in this. I got to be a part of this. And then the market absolutely knows, and that's why we had that failure to go lower. And again, the stabilization and it moving back up again. What?
Hey, Brian, I
Yeah.
hate to interrupt, but we
Mhm.
had a really important question.
Sure.
It's one that you've gotten before.
Okay.
You mentioned your infamous Harry Potter trade or pattern of the
Yeah.
lightning bolt. Do you mind just defining that quickly for folks who haven't heard you fling that term around before?
Yeah. Hold on. I'll do it. I don't know if you can see that or not. You
We can.
guys, do you guys see that right there? You see this little kid over here who's had to pay royalties to JK. I have not had to pay yet, but do you guys see this little pattern right here? What the Harry Potter is it's just a momentum. It's a momentum breakout basically. It's a trend continuing situation. The market moves in two ways, right? We'll do it up because everybody understands up, right? Market goes up. It's called the impulse move. The counter move to that is the pullback, right? Everybody says, "Oh, buy a pullback, buy a pullback." It's an impulse and a correction move. Okay. As you're breaking through levels, like say I have a level sitting right here. Okay. What you tend to see is with this moment, it's basically a momentum breakout strategy. Eventually, the reason why price, turned off this level, multiple times in the past and hit it and just kept dropping back down again is because there were sellers in that area. Eventually, the sellers are no longer there. But one of the things that a lot of people have said in the past is, like I'm sure you guys have heard this before. Old support becomes new resistance, right? And again, I'm not a support and resistance trader. Supply and demand tends to work the same way. It does follow where old areas of buyers become sellers. You may say, well, who are those buyers and sellers? Again, these are like computers, trading algorithms, and things like that, where it was a profit take it, but it's also an area where people now will suddenly try to reacquire the position, hence why it switches. So, what it does is it takes advantage of that. All the support and resistance traders know that, hey, listen, the candle, it moved up to here, right? I should definitely get in because the rule for support and resistance says, hey, as soon as we break, go long and then put my stop loss, put my stop loss right here at the break point, right? Well, yeah, the market knows that, right? Because everybody knows that rule. So what it does is it basically forms that same type of scar, right? The little lightning bolt that Harry has, right? So if I was to take this little lightning bolt here and draw a line through it, what it is it's breaking this zone, pulling back, stopping out all the retail traders that know, oh my God, I just broke a pivot high, I got to go long. When you get stopped out, again, it goes in the exact direction you thought. And think about it, as a retail trader, have you ever said, "Man, every time I get into the market, it like knows and it goes against me"? Yeah, you're absolutely 100% correct. The market did know when you got in because that's when 99% of the retail traders out there that are uneducated got into the market. Trust me, the market is a trap. It knows exactly what you're going to do. It plays on your emotions. It gives you it even gives you the quote expert, indicators, right? And there's 8 trillion of them that you can use. And if you keep adding more and more and more and more, all you do is confuse yourself. But a lot of these things that are the experts tell you are the trigger to get into them, or is actually just the trap of a professional trying to set a trap for you. You know, and this is one of those situations. So what it does is you're buying the pullback, and everybody tells you, buy the pull. I mean, they tell you all the right stuff, right? Buy low, sell high. The reality is most people buy high and sell low, right? After you've made a ton of money, right? You're buying more. And when it goes lower, you're like, yeah, 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 yeah. You know, you get so scared, you get rid of it. All this does is take advantage of it, and it's just this little lightning bolt. And we use it in both directions, whether it be up or down. Again, remember the markets are two directional, not just one. Harry's lightning bolt, had it looked like this, I think they would have been like, wait, lightning bolts don't, what's going on here? So again, yeah, it follows Harry's lightning bolt is all that it is. Okay, so hopefully that explains it. All right, so gold. Gold is boring. That's all I'm going to say. As exciting as oil was today, if you guys were able to trade that this morning, I give you props. Um, Here's the next technical term. This is hairy. If you've ever seen one of those, one of those worms, right? I don't even know if I type hairy worm and if that would actually even give you. Yes, it does. So if you type in hairy worm, this is why I've named it like this. You guys know these things with all little spikes on there? It's exactly what gold looks like right there, right? It's not giving us any type of direction. It's not giving us anything. We're at an area of interest, but look what it's done. Ding, 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 ding. It is absolutely boring with no direction. It's down 0.13 in 24 hours, right? Or since market open, right? Right now, there's not a whole lot we can do with it. It's kind of between two levels. The next area of sellers comes in at 1822. We got buyers back at the 1795. These are not new levels. I've said this probably every day for the last week at this point. There's just not a lot we can do with it when it's just so sideways. But right now, as far as your extreme ranges, again, if you're aggressive, probably some at 1822, but 1830, 1795 are good. News releases this week um, that will affect gold. Let's see. Let's go back to today. Tomorrow morning should ISM services PMI should affect it a bit. And then again, obviously, non-farm is definitely one of those things that could move gold. Remember, the reason gold is doing nothing right now is because of the inflation situation. As we hear problems with the unemployment situation, oh God, the world's going to end again. That's what's kind of keeping this the way that it is. It should absolutely, without a doubt, be much higher. We're seeing inflationary pressure. Everything is much, much more expensive now. But the Fed is telling us, no, 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 this is going to all go away in July. Well, we're in August and it hasn't gone away. So eventually are going to have to admit that they are wrong. And that's when it'll pop. Silver has been a little bit more volatile. And interestingly enough, silver is up 0.57 right now. But does silver look like it's in a crazy trend? Not really, right? We were sitting this time yesterday, we were sitting right here. We're in the exact same spot. All it did was kind of grind down on the overnight. The Europeans took it over and brought it right back up to where it was supposed to be. We're in the exact same spot. We talked about it dropping down, hitting 25.17. I was wrong. It hit 25.21. I missed it by a little bit. Next area for me where we've seen sellers, at least to some extent, really kind of step in and give us some momentum was at 25.72. Um, remember, again, we are now one additional month down. If you look at this one, remember, this is one of those Reddit things that, again, supposedly they were going to take down Wall Street and silver was going to be at 100 by the end of the year. Okay, it's 1 year return right now. It's minus 3.4%. Year to date, it's down 3.11. 6 months down 6%, and its 3 month is down 7%. 1 month is down 2. Its 1 week is up 2%, but again, it's only because we had a little bit of a pullback over here. But again, remember, this is supposed to be, according to Reddit, this is going to be at $100 by the end of the year. So I don't think we'll make it there. Do I think it should be a little bit higher than this? My personal opinion is yes. I think as soon as we start getting them start talking about controlling inflation, I don't think they're going to control inflation very well. But once they acknowledge it, I do think that this continues to pop a little bit higher. Okay. All right. Oh, last but not least, don't forget natural gas. I mentioned it before. Natural gas right now is up 1.75% today. Look how this thing has been bouncing back and forth. Again, big spikes up, big spikes down. It's too early to do any analysis now. It's 2 days. It's 48 hours ahead of time. Thursday morning, please, please, please go look to see what natural gas is doing. If you've never traded it before in your life, please go into demo and trade it. If you don't have a demo account, sign up for one. It's had so many trading opportunities and such great movement the last couple weeks. Definitely take advantage of it and do the same type of analysis that we typically do. Look for areas of basing, drop down to the 5-minute chart. Look for those kind of that news kind of stabilization where it like holds on the 5-minute and 1 minute. If it's in a 30-minute zone or like a 15-minute zone, take it long or short. And again, use those shorter duration contracts. But it's had some great movement, so don't miss out on that. All right. With that said, that is it for today. We went through a lot. I do talk quick. I know that. But make sure you guys mark off your calendar. And actually, this is incorrect. I won't be talking Tuesday at 12 o'clock next week. Remember, we have the Nadex Education Summit next week. I'm doing a presentation on technical analysis. If you guys are curious how to find your entries, but also figure out where your exit should be using a kind of a very technical tool that a lot of people talk about, Fibonacci retracements and extensions, that's what I'll be talking. And Todd, correct me if I'm right. Is it 1 o'clock Eastern time that I'm talking next week? I think that's the right time. Todd?
I think that sounds right. You'll see it on the Nadex website. If you go to learning webinars, you'll see the boot camp for next Tuesday and you'll find the whole agenda there.
Okay. Yeah, I think I want to say I normally speak at 2, but I think next week I'm speaking at 1. I just don't want to tell you guys the wrong time. But again, you guys can look at the entire thing. If you guys want more technical analysis, you'll get it there. With that said, I'm out of here. You guys have a great trading day. Don't forget, big week for news trading. Please go take advantage of it. Jump into those short duration contracts, particularly in the indices at the open this week. It should be a wild ride. If you need me for anything, here's the email address. You guys are more than welcome to answer it. And if not, shoot them over to Nadex, and I'll catch you tomorrow morning. Take care.
Oh, and one last thing I was going to mention, because we got 2 questions on it. If you want to catch the morning sessions, go to the Nadex YouTube channel. You'll be able to subscribe to the channel and set reminders. 8:45 a.m. Eastern every morning, 8:45 a.m. Eastern every morning, and we live stream it. So there you go. Thanks, everyone. Thanks, Brian.